Do start tonight with the developing story in the biggest banking failure since 2008. A major commercial bank has collapsed, spreading fears of a possible domino effect. President Biden has been quick to reassure the American people.
Americans can have confidence that the banking system is safe.
News 4 San Antonio's Marisa Mendoza spoke to local bank representatives who say they do not leverage assets the same way Silicon Valley and Signature banks did.
Local venture capitalist Emerson Nelson is not surprised two banks heavily invested in startup tech and crypto companies were shut down by federal regulators over the weekend.
What is crypto? It's a pretty little silver coin that people think is the dinero of the future. It's not.
Nelson, who is heavily invested in businesses like trucking companies and rental properties in the Alamo City, say investing money should be done in tangible goods or services.
If you're going to throw money at things that you don't know or truly understand, then don't be upset when the risk raises its ugly head.
According to the Federal Deposit Insurance Corporation, which insures bank deposits, there are nearly 400 local banks in Texas.
In fact, we've actually had an increase in deposits this morning.
Paul McSween from Jefferson Bank says they work with many commercial businesses in the Alamo City that far exceed the $250,000 FDIC backing from the federal government. He says trust is key with their customers.
But they work with us every day, work with us every week, and we know them, they know us, and so there's really not a risk.
And local credit union president and CEO Jeff Ivey of River City Federal Credit Union says locally financial institutions aren't leveraged the same as Silicon Valley and Signature banks were.
The banks and credit unions in San Antonio are very sound, very well capitalized, and in no danger of experiencing what has happened here recently.
Again, Ivy encourages people who do have questions to go to your local bank manager or loan officer. And again, the last thing you want to do is remove any of your money. From the Northwest Side, Marisa Mendoza, News 4, San Antonio.
Silicon Valley Bank failures made waves across the financial markets. The fear of having your savings wiped out, begging the question, just how safe is your money in the stock market during times of instability?
News 4 San Antonio's Alex Trevino joining us now with the very latest. Good evening, Alex.
Good evening, Simone. If people feel uncomfortable about the ups and downs in the stock market on a day-to-day basis, remember, there are other places to grow your money. Experts we spoke to today say the stock market should be viewed as a long-term perspective. Historically, according to finance professionals, the stock market can pay up to 9% on average, decade after decade, of any money you have in there. But if the stock market feels like too much of a roller coaster for you these days, then maybe you should consider other places to put your money that don't come with the high risk.
Maybe they want to put it in an account that essentially gives them a safe, guaranteed return because they put their money into bonds or money market or something like that has maybe a 4 or 5% return these days that one can feel comfortable.
An investment professional tells us if the stock market is not a comfortable fit for you, you might try keeping liquid assets in savings, money market, or high yield savings accounts. She also suggests having about 3 to 6 months saved up for emergency expenses. Another wise bet from investment professionals: continue to contribute your retirement accounts, especially if your employer matches your contributions. Reporting live, I'm Alex Trevino, News 4 San Antonio.
Alex, thank you, sir. Banks across the nation seeing a big drop in stock trading today after U.S. regulators made the decision to backstop depositors at Silicon Valley Bank this weekend. Today's drop was led by First Republic Bank, which lost more than 60% of its value after declining 33% last week, and Bank of America slipped 6%. The drops in stock come despite the Federal Reserve creating a new bank term funding program offering loans to banks in return for treasuries.
Melissa Vega at the live desk, happening right now as we continue to follow the very latest on the two banks heavily invested in startup tech and crypto companies shut down by federal regulators. Let's take a live look from the White House, where right now President Biden is calling for legislative actions to re-tighten financial regulations. The president also taking to social media. We want to show you what the president is saying on social media, saying, "I will ask Congress and banking regulators to strengthen tighten the rules for banks to make it less likely that this kind of bank failure happens again. We must protect American jobs and small businesses. The president also going on to say we must get a full accounting of what happened and why, so those responsible can be held accountable. That is the latest from the Live Desk. Simone.
Melissa, thank you.